Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 14th, 2011. Let's get into the charts today. The markets again are floating up. This is a standard Friday effect. Again, we called this in last night's Research Center nightly video, and again, to expect the upside was not a surprise. Why? Because volume is light on Fridays. The people that are out there that continue to prop the markets up, namely the Federal Reserve institutional players, they are going to have a up Friday 9 times out of 10 because they want to get buyers out shopping. They want to get the average American out shopping, spending money to infuse more money into the economy, and that's the nature of the Friday effect. So basically, if you go back, you can see basically almost every Friday has been positive for the last probably months and months. If you go back, you will see more and more Fridays positive across the board in years than you've probably seen over the last couple of years. In any case, it's an amazing effect here, and we call it the Friday effect. So the market's floating up, which is what we called for. There was a great trade today that was done in the intraday stock chat, which was just beautiful based on the In the Money Stocks methodology. I will discuss that shortly. Other than that, folks, we have many other trades today. It's actually been a fantastic trading day, but I want to discuss a couple different things. First off, the market. We did have a small minor gap down today, quickly raced within the first couple candles. The gap down came on the back of a little bit of CPI data, and overall the market again just very, very tired. JP Morgan initially reported earnings this morning. Intel reported earnings after the bell yesterday. Both earnings announcements were solid, but those stocks are so overbought that initially they saw some profit takers, and that's really what carried the market down initially for a small minor gap down. But once the market opened, the powers that be, the permanent open market operations, or POMO by the Federal Reserve, all these factors kicked into effect, and the markets just went sideways to up. And you can see it's been a continued sideways to up move. I mean, you could just draw a trend line right through the averages of all the candles, and you just get a sideways to up move like this, which again is continuing to take the market higher. Now, we are above the 128 level, and assuming we close here, that will be confirmation, so be aware of that. Target after this is now 131. I did release a new swing trade in the Research Center on a large cap play. I do encourage you to join the Research Center and get that trade. It will be a big trade. We will make profits on it, so be ready and enjoy. All right, so again, profit lines, the market continuing to grind higher. You can see initially it came into these moving averages and stalled out for the first couple candles, but our methodology dictates, and this is key methodology I'm releasing here, that as you hit into a level multiple times, it weakens it, and you can see once into the 50 and the 20, two into the 50 and the 20, and then on the third try it gets through. Then you get a little bit of a pullback, but again, this level's already been pierced. It's very easy for it to go back up, especially when that light volume kicks into effect and pushes the market higher. So again, Intel earnings good, JP Morgan earnings good, CPI not so good, a little hot, especially with food and energy up 0.5%, but nonetheless, the market pretty much ignores that data. I mean, it really does ignore that data at this point. Almost all negative data is being ignored. The market, again, volume too light to really have much impact on the downside, and light volume along with Federal Reserve help and some decent earnings helping drive this market higher today. The Dow right now sits up 30 points on the day, the Nasdaq up 10, and the S&P up about 5, a quarter to 0.5% gain today. I think probably we continue to grind neutral to higher. I think you're probably going to reach a high at certain levels coming up here soon where we just go sideways for the most part, but again, it will be sideways to up. We're coming into the 129 even number. That will be a scalp if we pierce the even number for an even number play for a pullback. All right, let's talk about some key trades today. First of all, ExxonMobil having a good day today, up 60 cents. I do think this is getting extended on the daily. Chevron continuing to move up now, up 22 cents, breaking higher as the market is moving higher. JP Morgan with earnings. Look at the move here on JPM. It is into resistance at 45.50 to 45.60 here. And again, if I zoom out, you can see pivot levels right up in this range, guys. Very, very key into this upper range on JP Morgan. If it gets through this, it's going to go to this line, which will be next on JP Morgan at the 46.20 level, and then after that you have the 48 level up here, which will be the next spot. But right now you do have some resistance right around 45.60, 45.50 to 45.60 that we are watching. Now, if we go across the board to Goldman Sachs continues to have a good move today, although it is into a little bit of a double top up here. This is the daily chart of Goldman. You can see this pivot high is where we are currently now. If we go to the intraday Goldman, you can see it's been a powerful move, but it's stalling out at that level. So you can see how the levels are working beautifully right now. Some other trades out there. What are we looking at here? Apple Computer up $1.50. Really not that big of a move on Apple. Percentage-wise, that's only 0.5% move on Apple Computer. Amazon is continuing to be pretty strong today, up $1.58. This was strong as well yesterday. IBM's up $1. IBM continues to be just underneath that 150 level. 150 is a key resistance level on IBM. Look for it to pierce and then maybe pull back off the 150 line. I do think, again, based on the fact that it's a holiday weekend, it was a no-brainer the market would move up. We talked about this in last night's video, and we always know the Friday effect. I've explained that to our members very, very well. Now let's talk about the trade of the day, folks. This actually might be the trade of the week. I want to explain it to you guys. Some of you may not understand it fully because we do use proprietary methodology that we have created, and it works unbelievably well. But the trade was on McDonald's. Now, McDonald's, again, has been crushed. If you look at the daily chart of McDonald's here, look at the drop. It's gone from basically 81 bucks to a gap down level and a drop down today to a low of 72.14. Now, today, I made a decision, and the decision was to buy McDonald's. Why? Well, the idea here was you pierced the 200 yesterday and you gapped lower. Now, we have a strict methodology point here that tells us if you close below the low of yesterday's breakdown below the 200, then it confirms that it is a breakdown below the 200 and the stock would go lower. So right when I bought it at 72.23, it was trading below that level. But the idea was it was already down 40 cents on the day or so. And I said to myself, listen, McDonald's is oversold. We know that. It's already down 40 cents for the day. You have the Friday effect, the light volume, all these positives going into the weekend. Chances are, even if it goes a little bit lower, my risk to the downside is 10, 15, 25 cents. However, if the stock starts to rally and gets back above the low right here from yesterday, then there's no confirmation, and that signals a move to the upside. And again, you could easily get back above the 200 moving average. So on the upside, I was looking at $1.50 to $2 upside potential on this trade. So you have a 25-cent max loss, which again, you'd cut at the end of the day today if it didn't close above yesterday's low, or you have a $2 upside gain. So 25-cent risk with $2, $1.50 gain on the upside. No brainer, guys. Again, I bought it $72.23. Everyone in the chat room joined me. The stock then continues to rally and has rallied. Look at this move. Again, this was my entry right down here, guys. I got it basically at the lows of the day. And look at the move up here. Again, many traders took some profits here. They took some profits up here. It depends on you're in the money, you're in control. As long as you have a break-even stop and you've taken some off the table, you're in the money at this point. But again, the methodology worked. Why does the methodology work? Well, because when you take out the 200 without confirmation, what it's doing is shaking out the weak hands. All right, so you have some longs in there that bought. They're saying, oh, I'm so scared now. You know, the stock's below the 200. They cut their loss. They run. You also have shorts jumping on board. Now, an idiot short that would be. I mean, that would be a pure, simple idiot. If you're trading that and shorting that, you deserve to never be trading again in your life, to be honest. All right, why? Because the stock's oversold. You're buying it already down here. Why would you short it now? Why didn't you short it up here? Why didn't you short it here? On a breakdown below the 50. At least there you could make a case that it's going down to here or possibly breaking down. Now it's down tremendously. The shorts are just idiots at that point. But again, there's a lot of amateurs out there that are the idiots. So, I mean, it works for us. Now, as the amateurs are jumping on board shorts on the short side, and the amateurs are also saying, you know, too scared and dumping and taking a small loss here from the 200 play, the smart traders are recognizing, those in the money stocks, that you want to look for confirmation. Without confirmation, this trade should still go back up and hold the 200. That's exactly what it did, folks. And the institutions know this. This isn't something that's taught. The In the Money Stocks methodology is, again, strictly for In the Money Stocks members of the Research Center, of the chat room. This is something you can play in perfectly. I mean, it's just perfect. Now, there's another trade here, DISCA, which is the same thing. All right, here it collapsed below the 200, went even lower. Many traders bought it at a pierce of 38. I gave the alert out that below the even number of 38 would be a buy. It went a little bit lower, and then look at the bounce back. Now, technically speaking, you're in the money in the driver's seat on this trade, and many players are in the intraday stock chat in the money on this trade. They have a break-even stop, and what they'll do is, if you don't regain the low here from yesterday, then it's still confirmation, and you take your profits at the close. If you get back above the low and close up here, then you can hold the trade and wait for swing trade to give you more outside, as it should bounce back to the 200. All right. Not only that, but you have a bottoming tail forming, which is bullish. And again, simple stuff here. Friday effect. Use the Friday effect to your advantage. I mean, there's so many tools out there to make you a smart trader. So many tools. Use them wisely, folks, because you can profit. Other trades today that made some money. We had some good small cap biotechs that went on a run. We got some of those beautiful little moves there. Um, Other than that, folks, it's been a fantastic morning in the intraday stock chat. Volume is definitely dying out now as we kind of come towards the afternoon session in the markets. The markets, again, continuing to move up. By the way, guys, we just talked about an even number play on a Pierce of 129. Guess what? The market just pierced 129 right here, went to 129.03, and now it's pulling back. That's an even number scalp. I talked about that just at the beginning of this video. And again, you're in the money by about 3 to 4 to 5 cents now. Looking for that quick little scalp, yank it off the table, make another few $100 going into the Friday weekend here, and enjoy your weekend. All right, guys, that's where it's all about. This video again brought to you by the letter P for profit, since that's again what we had a great day in the intraday stock chat. Research Center again, I'm releasing trades today. I did release one already. You want to be getting in that because again, these stocks will play out next week that I'm putting up there. And again, it's all about profits, folks. Bottom line, All right. Take care. Have a great, fantastic weekend. Come join the Research Center. Come join the intraday stock chat. I'll give you guys an update over the weekend. Take care.